Hi everyone, hope you're doing well. We are now doing the next standard, that is SA 450, super simple standard, has just 4 questions. Ensure that you're knocking it out of the park. Okay, it doesn't get easier than this standard. Very simple. Let's get it done. Please here. First is consideration of identified misstatements as the audit progress. How should you consider the misstatements as an auditor? Okay, so let's see this. Please here. The auditor should look at the identified misstatements and circumstances of their occurrence that indicate that other misstatements that exist when aggregated with the misstatements could be material. So the auditor is basically looking at the possibility of material misstatements, okay? Or the aggregate of misstatements that have already been accumulated, are they material or not? That is what the auditor is looking at. That is basically is if there could be material misstatement, or already the misstatements that we have in aggregate, are they already material or not? In both the situations, what we'll have to do is we'll have to give these material misstatements to the, or the so-called to be material misstatements to the management. And we'll request the management to see, examine the TAD, transaction account balance disclosure. We'll tell them, please look into this matter carefully. If the management is sincere, what they will do is they will try to get to the root cause of why those accounting mistakes happened. So the management will look at the cause of the misstatement. They will determine the amount of the actual misstatement, and if they are sincere, genuinely sincere, they will make appropriate adjustment also. They'll look at the root cause, they'll see what is the amount that is wrong in terms of accounting, and they will make the adjustment also. Now, if they have made the adjustment, we cannot just accept everything on face value, correct? No. So we'll have to check whether they have made the adjustment properly or not. So what we are doing is, see this, we are seeing whether the management, whatever misstatement they have given us, see, if the auditors, if at the auditor's request, management has examined the TAD and the corrected misstatements that were detected, the auditor shall perform additional audit procedures to determine whether the misstatements remain or not. So we are checking whether they have actually corrected it properly or not. That's it. This is question number 1, consideration. Simple. Question number 2, very simple. Now this is in relation to communication and correction of misstatement. Let's see this. Please here. In this case, first of all, what they are saying is timely communication of misstatements is extremely important. You cannot accumulate all the misstatements till almost the end of audit and tell them, please correct everything now at one go. Very difficult for them. So as soon as you come to know about misstatements at regular intervals, you should keep on informing them, so that as soon as you inform, they can correct and give it to you back. Then you can check whether correction is done or not. And it is a back and forth process that can go on. Correct? If the management refuses to correct some or all of the misstatements, we gave them, let's say, 100 misstatements to correct. Some or all misstatements they have not corrected. Some they have not corrected, or all they have not corrected. In that case, what to do? Tell me, what is the natural thing to do? Ask them, why have you not corrected? That is what you have to write. See this. Understand the management reason for not making the corrections. Normally, the audit paper, no, you have to apply common sense in that situation. If somebody doesn't correct the misstatement which I have told them to do, then what will you ask them? You will ask them, why haven't you corrected? That is what you have to write in the examination. As simple as that. But you have to read the area and understand the concept nicely. Correct? Next. And shall take that understanding into account, and when evaluating whether the financial statement as a whole are free from material misstatements. If the uncorrected misstatements are still there, we will see whether it is material or not, because you know very well, see, uncorrected misstatements, if they are there, but if they are not material, then it doesn't bother us. Correct? No problem. But if uncorrected misstatements are material, then we have material misstatement. And material misstatement, then our reporting will change. Correct? We'll give either a qualified or an adverse report if material misstatement is there, if we have obtained sufficient appropriate audit evidence. Are you there with me? Yes or no? Okay. This is question number 2. Okay. Question number 3 is super duper simple. That is regarding uncorrected misstatements. Evaluating the effect of uncorrected misstatements. If uncorrected misstatements are there, what will you think? From which angle will you think regarding those matters? First, is it uncorrected misstatement because of size, means because of amount? Is it uncorrected? Is the uncorrected misstatement having an effect on the financial statement? Because not because of the amount is small only, but because of the nature. Nature means if your materiality benchmark is 5 lakhs, but if the director has done a theft of, let's say, 4 lakhs, so is it less than materiality benchmark? Yes. So amount wise it is not material, true. But think, shareholders, if they come to know that director has done theft of 4 lakhs, then is the amount important or the nature of the transaction important? Nature is important. Imagine the person who you have appointed to run the business in which you have invested in. That person is stealing, maybe a small amount, but still stealing, no. So you understand here, the nature of the misstatement is such that it is an important matter to look at. So we'll look at the amount, that is the size, and the nature of the misstatement. Okay. Next, we'll ask ourselves the effect of uncorrected misstatement related to prior periods. Sometimes this year accounts are proper, but last year some mistakes were done, and that is getting carried forward and affecting this year's accounts also. That is what the auditor is looking at. Comfortable till here? That's it. Question number 3, easiest thing in the world. Question number 4, documenting regarding misstatements identified during audit. What will you document in your working papers? That is, in chapter number 6 we did audit documentation. So what will you document? The first point, amount below which the misstatements would be regarded as clearly trivial. Trivial means so small, so negligible in value, that is not important. So there also has to be a benchmark, because below which we'll say, oh, below this we are not going to even bother about it because it is clearly trivial. Trivial means very negligible, not that important. Example, for Reliance Industries Limited, 5,000 rupees transaction will be clearly so small that it is not even worth it to check it. Are you there with me, yes or no? Okay. All misstatements accumulated during the audit and whether they have been corrected or not. So whether all the misstatements, whether they have been corrected or not. And those uncorrected misstatements, whether they are material or not. See this? Uncorrected misstatement, whether they are material or not. So these are the 3 things we will document in our own notes. That is as per the own notes means you know very well, that is your working papers or work papers or audit documentation that we see in chapter number 6. Very easy. This completes your essay 450.